All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Hope everyone's having a nice morning this morning. It is Thursday, January 5th, 2023. Still getting used to that 2023. Always thinking in my head, oh, it's still 2022. You'll get used to it. Probably by February, we'll say 2023 at the normal rate as it should. All right, let's go ahead and get started. Bottom right-hand corner of your screen currently, if you're watching this video, click on that, turn on notifications, subscribe to our channel. Make sure to like our videos if you do like them. Thank you for coming aboard again. Let's go ahead and get started in the day. Dow futures down 221 points, NASDAQ down about 0.81%, S&P down about 0.72% this morning, 3847, and the Russell down about 0.76 this morning. Let's go around the horn rather quickly. I'll go ahead and do that. We'll start with S&P 500 futures. Again, pretty much just the chopped zone that we've had really since the Powell FOMC and the Powell press conference. We've been stuck in a range now between 3,900 and around 3,800. Some good news and some bad news. The bad news is we keep rejecting 3,900. The good news is that we do have rising support, at least in the short term. We had as low as 37.88, and then we tapped 38.05, and then we tapped around 38.20, 38.17, let's just say. So the next support higher is 38.30. If you're looking at this, again, downward wedge or downward triangle, whatever you want, descending wedge, descending triangle, again, you could see higher that the actual trend line coming down. But again, that hasn't held up perfectly because we broke above it a couple of times. So again, you could always just remove this if you want. That'd be a little easier. And then you could see that 3,900 rejection as we've been going. Now, again, I do have QQQ puts and Apple puts running. I did hit Netflix calls yesterday with the team. I do expect us to at least test this 3830 level, at least in the S&P, if not break it by today and then maybe get to 3,800. The only reason I say that, at least, was yesterday we had the FOMC meeting minutes, and that was hawkish. I don't think that was as expected as hawkish as many people thought. But again, we got some little bit of back and forward volatility. It's really just chop right now. I mean, other than that, there's not really much momentum unless you're in the single stock names, the high betas that have been doing well, like the Upstarts of the world, the Carvanas of the world. They did okay yesterday. Netflix did well yesterday. Meta, Boeing, they did well. Tesla even bounced yesterday. Tesla is down pre-market. So let's go quickly to pre-market movers. We'll go ahead and move here. S&P 500, Tesla down about 2.4%. Walgreens reported earnings. They beat on the top and bottom line. They're down 4.5% this morning. Carnival down 1.72. Nvidia down 2%. Microsoft, Satya Nadella said that it'll be about 2 years until tech really starts coming back, according to an interview regarding India. He's talking about tech in the U.S., tech stocks. So Microsoft down about 0.87% after their downgrade yesterday, I think by Cowen. They were down, I think, more than 5% for the day. So again, an additional downside move for Microsoft. AMD down 1.3%. Meta down 1.22% this morning after a nice boost yesterday. Alphabet, Google, formerly known as Google, down 0.89% this morning. Amazon reported that they're going to have some layoffs. They're up this morning. Apple, there's a report that Foxconn in December is kind of getting back on track. We'll chart Apple together. In regards to the Dow, Intel down about 1% this morning, Verizon up 0.17%, Boeing above 200 but down 1.25%. Salesforce, again, they reported their layoffs too. I think it was yesterday, down about 1.03. American Express down 2.42% this morning. I didn't see any downgrades on that. I'd have to check that. But that's where we are this morning. A lot of headlines as we go along. Real quick, we had, let's see here, Thursday, we had challenger job cuts. Job cuts were higher year over year, 129% over year. I think that's the reading. ADP non-farm payroll change. This is the private payrolls, added 235,000 new jobs. Again, labor pressures. Again, we don't have enough workers to fill the demand, so demand is still strong. And again, I think this is what the Fed is trying to get rid of, guys. They're trying to kill demand, let people stop spending money, stop doing things, because that's going to reduce inflation. And I said this in about Q1 and Q2 of last year, that it is easier to increase supply than it is to increase demand. Once you kill demand, it's going to take a while to get demand back up and running. That's the worry I think for the market right now, is that the Fed is on pace to just kill demand by any means necessary, raise. And then once we get to the bottom, to the point where inflation is peaked, which it has, or inflation has hit the point where we want it to go, who knows how long that'll be. We already seen European inflation come down, and they're the ones that are really affected with the Ukraine and Russia conflict, obviously. But with that being said, again, we don't know when the Fed is satisfied with inflation. We don't know if that's when CPI is below the Fed funds rate, because that's coming up. Maybe it's when the yield curve inverts. But again, we're starting to get into a deflationary zone. And again, deflation, especially a very, very quick one, a very impulsive deflation where it's just very, very sharp, again, does not bode well for an economy. You can ask Japan in the 90s. Unemployment claims 204,000, still better than expected 230,000. Trade balance did beat. We do have a final services PMI later today in about 9:45 Eastern. Natural gas inventory comes up, natural gas storage, and then we have crude oil inventories. Tomorrow being the big news would be the average hourly earnings, non-farm payroll report, and unemployment rate. We also have an ISM PMI tomorrow at 10 a.m. We'll go over the non-farm payroll report tomorrow at 9 a.m. when we have our video live. So with that being said, let's keep going here. Crude oil up 0.44%, 73.13. We know the drill, right around 70, 75. That's what we've been kind of hovering around. The gasoline futures up 1% today. Gold futures down 1% with the dollar being higher. Dollar's up 0.63%. Yields creeped up higher after those unemployment claims and the Challenger job cuts and the private payrolls as well. So again, higher rates, higher yields. Copper futures up nearly 2% this morning, even with a higher dollar. So copper is usually an indication of construction spending or growth of some kind. Euro dollar down about 46 pips this morning, 105.54. We still want to get to 107, 133.58 on the dollar yen. That's up 93 pips, 119.17 per pound dollar, down 138 pips. Bitcoin pretty muted today. Bitcoin 16,765. Even with the Gemini stuff, there was also some news regarding a crypto. I think a crypto. I don't know if they're a lender or a broker. But let me get the headline for you. Silvergate raced to cover $8.1 billion in withdrawals during crypto meltdown. Bank sold assets at a loss to cover withdrawals and cut 40% of its staff, but remains committed to crypto. And Bitcoin futures are not really reacting as much. 1246 on Ethereum. The volatility index at 22.5, up 2.23%. We're going to go ahead and chart each of the things that are pretty important here. And again, you can see the S&P 500 futures, guys. It's just been chopping. That's it. It may feel like something big is happening, whether yesterday we were up yesterday or down today or down the day before yesterday. But here's exactly the move, a whole nothing burger. The only things that are moving are the individual names. So let's go over Boeing. I saw that question here quickly. Let's see. Sovereign is asking about Boeing. And again, we had Boeing on the watch list. There was just no volume on those calls. We do have a gap to fill right around 190. We are now above a very key level of resistance that we had. We had a double bottom here on the weekly chart. In regards to Boeing, and I like Boeing, what you really need to get is above 230. I think that would probably indicate that more likely the worst is possibly over for the stock, at least in a 12-month period. Again, anything could happen, as we know. But again, you could see we filled some gaps here on the weekly, filled some gaps on the daily. And again, you're starting to break out on the daily as well. 230 being its next resistance, about a $17 move. If you really wanted to play that, I wait for this gap to fill here around 190. And then you have one more gap to fill here at 208. So that could be definitely the level that you're looking for a target for a trade. Again, we wanted to trade it this week, but there was no volume on the options, which really sucked. Again, short week, this is what happens. The last 2 weeks kind of sucked for that reason. So it's kind of hard to get that momentum. But again, the chart looks really, really good. Once you get above 208.48, there's the gap there. And then you have a gap here at 192. So again, that 192 could fill, probably a good place to reload. If anything, if you want to trade and probably get back to 200, not a bad trade there. But let's see if we can get to this gap fill. We'll add it here, 190, let's call it 191 for that gap here on the daily. And I think once you do that, I think I may want to go long on Boeing as we go. So I put the alerts there. Netflix and Apple put levels. Let's go here. Well, Netflix is doing better. You could see that there was a gap here on the daily that has not been filled as of yet. It is now trading at 307.39. We caught that yesterday for next week expiry, so well done, team. That gap has not been filled. There is another gap here at 250.21, so be careful there. If you are looking for a put on Netflix, you really want to break right around 275, maybe 273, or you can wait for that 100-day moving average at 264 to play this gap fill at 250. That would probably be your best bet for a put option. But again, you still have this 313 gap to fill. Once that does, again, do we consider to break out to 328, which was the very, very big gap level that we had before? And to be fair, we have yet to fill it. Pretty close, but I don't think we filled it as of yet. Oh, no, we did. My apologies. That gap has been filled. So let's see if we fill this, maybe pull back a bit to back to the 20, and then we can reload, possibly look at the 330 calls, if anything, for a little bit more time. This is running a little expensive. Obviously, momentum is to the upside on Netflix. I think our trade was like $4 on those Netflix calls. Apple put levels. I do have Apple puts as well. Again, it's broken down pretty much on every single chart, including the weekly. We talked about this gap to fill here on the daily right around 120. That's my strike price for the end of the week. I don't know if I'll get it, but if we do get a little more of a meltdown, we may be able to catch it. Uh, See here that 114.47 level. That's your 200 weekly moving average. That's what we're looking for. That's the real target. Remember, Tesla got there. Remember, the S&P bounced from there. Tesla sliced it. So again, we'll see what Apple does, but at least on the weekly chart, there is no more gaps to fill. At least on a 2-year basis, all you have is that 120. 120 may be the bottom on Apple, depending on external factors, of course. But again, big move for Apple to the downside, as we can see. Really, you need to get above 130 in order to get back this support, where now your recent support becomes resistance. So you need to get 130. When do you think is a good time to add Palantir for long? Which I still own my shares and I'm down big, I know. And again, it's a stock that I want to own for a while, obviously. Now, when is a good time to get into Palantir? I have an alert here. I have a level here at $9.41. We're at 658. That's a 33% move to the upside. You do have a gap to fill at 737 on the 1 hour. If you bring up the daily chart, really not much to go by. There is a couple of gaps, but in order to really kind of get out of this little move for this bottom here, maybe we're creating a base, really need to get above maybe $7.37 in order to do so. But we're starting to get close to penny stock land with Palantir. Remember, anything below $5 is considered a penny stock in terms of stock trading. Again, then we could talk about if they're doing reverse splits or what have you. But I think right around 750, $1 more, that's when you could probably see we're starting to base. Maybe a little bit of a inverse head and shoulders here. Maybe we'll see on the 1 hour. But Palantir is definitely a riskier trade, a riskier stock to own. It's a hyper growth stock. It's a high beta name. So again, we know the deal when it comes to that, when we're looking for those names. When do you think, excuse me, are you going to do a top stocks of 2023? Yes, I am, Austin. I will be doing that this weekend. I have a lot on my plate this weekend, but this week, obviously, it's a short week. Definitely want to focus on what we can do for our members, make it a great week. And then Saturday, while I have the Kansas City game on with the Raiders, I'll be doing my top 10 stocks of 2023. I might do it a podcast this time, or I can do it a video. I got a recap video for my investment club, and I do have the forecasting report that I have to type up. So again, a lot of stuff coming up this weekend. It will be a busy one. Thoughts on GE, General Electric? General Electric, I believe, spun off one of their healthcare units. I don't know if that's going to help the bottom line in terms of General Electric. Again, we'll bring up the weekly chart. Really, your resistance here is right around 86 or so. We'll go ahead and zoom in a little bit here. Kind of a double bottom here, right around 48. Starting to move a little higher, maybe above 74. You start seeing some momentum, but again, a nice move to the upside, but it is pulling back right around 69, 68. You have one gap to fill here at 66.39. Let's see if that fills. Maybe today we get a little more weakness. We fill that 66 gap, and then you can possibly look for 70 calls. I don't think there's a lot of volume on GE in terms of options trading, but in terms of the stock to invest in, again, I'd have to do a little more deep dive into financials if there's any growth there. I remember General Electric has been smoked before many times. I remember when this stock was trading in the single digits for a long time. And I believe now they did a reverse split, because that's probably what it is. They did a reverse split, and I remember it was right around, I think it was post 2011 or 2014, 2015 or so. Right when I started GAR, I remember General Electric was absolutely getting crushed. It was GE Capital that was having a problem. This was post financial crisis. GE had a lot of assets they couldn't sell. And again, they were in the finance arm, consumer finance as well. So that hurt them. But General Electric obviously is kind of a turnaround story, is what you're seeing here. But I'd have to do a little more deep diving. But again, just based on the charts, 74 seems to be resistance, pulling back a bit, but you do have a gap here around 65. Maybe wait for that gap to fill and see if it's worth a shot if you like to own it on General Electric. But I'd have to do a little more deep dive on the fundamentals on that. All right, let's go ahead and bring up here. So we went ahead and went over S&P 500 futures, and we showed how much of a chop zone range we've been. Look at this. It's not much there, guys. The indices are not really moving. The dollar index is rejecting 105 again. Qs are holding on to support for dear life at 264, and Apple is still below still below the 130 support, that 130 resistance that was support. So again, guys, a short week. We know the drill. We do have NFP tomorrow. We'll see that jobs number. But again, guys, indices are just ping-ponging around back and forth. What we're waiting for is either a break to the upside or a break to the downside. And in order for us to get a break on the downside, we need to get to around 39.29, which is that support or that rising trend line that we have at the bottom of S&P 500 futures on the 1 hour. So again, 38.29, 38.30 is the level you're looking for. Your next support right around 38.01. Again, the only thing I don't want to trade in regards to S&P 500 futures, SPY, is I don't want to get chopped up just in this zone. We want to wait for a breakdown, just be a little patient. Again, it's only been a 4-day market week. The week before was another 4-day market week. Again, it's just one of those like that lost 2 weeks where no one knows where they are. You don't even know what year it is. You're still kind of in holiday mode, getting rid of your lights, getting rid of your tree. Uh, Next week is really where I think we start seeing some traction to either side. Again, it could be up or down, but again, at least some volume. At least what we want here is at least an opportunity. We want good quality setups. We want high probability setups to trade, whether up or down. Right now, you're not getting tons. Yesterday, we did catch Netflix, but again, let's see what the market does as of today. I wish it could be a little more exciting, guys, at least for this week, but it really hasn't been. A lot of news, a lot of back and forth, some Fed stuff, some jobs, labor stuff. But other than that, it's still a short week. We need to see if we're going to get some volume towards the new week as we move forward. We have earnings reports in January. We have a Fed in February. So definitely a lot on the plate. There's no need to rush into anything. Keep it tight and see where we get for next week. Have a great rest of your morning, guys. Thank you so much for joining me. I will catch you guys tomorrow for the morning note. And have a great rest of your day. Happy Thursday. See you then. Cheers.